Hey guys, this is Leena Parvani again with you. So today we have something special to cover in this episode, and that's the special request which I've been keep receiving it. I need to review the new Futura product for you. I have done the review of this product long ago, and last year that was 2020, and that time the product was different and the product has changed after 15th of October. Then the second change has also happened in 21st December 2020. So what has changed in that? Is it still a good product to buy, or how it is still working for you? So today I'm going to be covering the major feature change in this product as my review. Two individuals buying a same policy, same age group, same health condition, everything's same. So now these people go to different agents. One agent give you X amount of premium, second agent give you X amount of premium, and those are different. How is that possible? Well, that was possible before, not anymore. With Zurich policy being extremely popular, whole of life product, and with cashback type of a mindset, some people like the cashback whole of life structure. For them, this was the important policy, but the premium was coming different. This problem doesn't come much in the term insurance policies, but with the cashback policies, yes. Why is that so? Because both of them were giving you projection rate in the policy differently. One would say 6% basis, one would say 8% basis. A layman person does not understand the mechanism gone inside that and how they created illustration. They just know I'm getting a life cover of $1 million. My premium is this, and why his premium is lower than mine, right? Well, this problem is now solved. The new Futura does not allow different rate of projections now. So all the agents now have to use the same standard illustration coming from Zurich. You buy irrelevant any place, any agent, whether it's a bank or agent or advisor, anybody is going to be same. So that's the best thing that happened now in Zurich Futura. What is the second good thing has happened now? All right. So that is the best thing happened in the Zurich Futura. Now every person, every agent you buy from the policy has to be only and only coming in at the 6% projection, and that is being fixed into the illustration. Agents cannot change that thing. This will remain fixed. It will come from that. That's why the premium will no more vary from A to B. What will vary? Will be different thing, like the services, your relationship with the person, right? What else has changed? My policy does not last longer at the age of 60. My policy actually showing a lower cash value, or a policy actually dying. What does it mean? You paid $50,000 in 15 years, and 30 years down the line your policy doesn't even have enough cash to survive this policy. Yes, this was happening, and this could happen if your advisor does not manage your policy properly. Why? Because this policy have some cash value in it, some investment built into it. So what kind of investment happening into that, advisor looking into this or not? Most of the time what's happening, the advisor are not looking into it, the investment inbuilt inside the policy will die sooner because nobody serviced your policy for a long time. I personally have reviewed those policies which purchased like 20-25 years before, and those did not have enough cash values in that. So that's a scary part of it, right? But I would say that with the new product, that has also been resolved a very big time. Although the product's still new, we cannot say what's coming in 30 years down the line in this policy. But what I can oversee it, because the policy seems to be now more expensive, a little bit more overfunded. So this policy can survive much longer than the previous policy. Number 3, what has changed is the transparency. The policies, new ones, are much more transparent. Why? Because insurance authority comes back saying, guys, you need to show what are the charges inside the policy. You cannot be simply sending a statement without client knowing where my policy charge, what are my policy charges are into that. So when you were given previously your net cash values 10 years down the line, this is what it is, and you don't know why I'm given this much money only, why I'm losing this much in that. So the much more transparency, which is as per the regulation, which is impacted in the policy, has come now. You will know exactly in the policy illustration what are the charges inside the policy. Let's say 6% illustration rate, which I mentioned to you, number one, that itself has included 1.6% charges of the policy management and the fund values. Fund value charges are inbuilt into it. So that means every time what you see the return cash values in the policy, already inbuilt this charges, net of the charges is what you're going to see this thing, right? So looking at the charges, most important thing not to be ignored are previous Futura policy for first 2 years. If you see your cashback or any allocation of investment was zero. There was no investment for first 2 years of your premium. That was all going to the complete charges, and your investment allocation was literally zero. So that has changed now. Let's look at this allocation chart. First 24 months in your previous policy, 0% was going towards any kind of investments. Now in first 24 months, your 50% premium is actually going towards the investment and 50% going towards the charges. Earlier policy from month 25th to 120th month, your allocation rate was 93%, and after 120th month was 98%, which is a big time change here now, because now from 25th to 60th month you will have a 93% of allocation rate, and 60th month onwards so you will have a 98% of allocation rate. What does it translate to you? How do you relate to this? This means your policy cash values will be much higher. The most important change also comes in the premium. When I mention these so many changes, allocation rate and this is equal treatment for all, it also, all these changes translate into your premium as well. So what is the hit on your pocket now? So premiums, yes, definitely increase. Imagine somebody was showing it to you on the projection rate of 8%, and now it is 6%, which also include 1.6% of the charges into it. So technically it is 4.5%, and then versus 8%. So your premium actually gone more than double. There are many other charges, plus allocation rate has gone up, so which made your premium actually way higher than before. Premium which was earlier $3,000, now it is $7,000. So you decide now, is it still good for you to buy, or before you buy, compare different products and look at that case is really good for your pocket still or not. That's your call. Let's fix this point and summarize what are the changes in that. As I mentioned, now the good thing is it's an equal treatment, no more false play, no more different agents coming with the different kind of premiums. I'm playing with the premiums. More transparency in the policy now. You know it in and out how your policy is performing. High allocation rate from the year one, that means the charges are less in first year, where it was like zero, you couldn't get anything. If you cancel your policy in first year, you get nothing. Now you do. Premium, yes, that's the hard hit part. It is increased now. So as I mentioned to you, now you decide what you want to do that. If you have any more questions with regards to new Futura, please do throw me a questions and I will be able to share whatever I can in my knowledge. Thank you. Hope you enjoyed this session, and do not forget to subscribe to my channel. Thank you.